Hi everyone, this is Paul Lange from DTS and I want to introduce you to what you are about to watch. This is an hour-long event that was presented live to the free members at Discipline Trading Strategies. This is called a Fireside Chat at DTS, and this is the last event of the year for free members at DTS. In prior years, I've kind of done a hit list of some of the favorite events. I did a little bit different here. It's not a hit list, but it's kind of the favorite concepts that I like to get across that I think have not been properly discussed or emphasized. And I think there's some of the key topics, whether you are a trader that's doing well and want to do better, or whether you're new and learning, or whether you're just debating whether or not you want to learn how to trade. If you enjoy this, check out the many other full videos of educational events, articles, and Trade of the Week videos, which you can get access to at the DTS Free Stuff page. But for now, sit back and enjoy this event. Hi, everybody. Last event of the year, last free event. I'm doing the last seminar series of live events Saturday. But other than that, this is the last event of the year. You have a fire. It's on the screen. Don't you see it there? Right behind that delicious cup of hot chocolate in a beautiful DTS mug. You know how many times I had to take that picture to get that right? I kept swapping out the mugs, clear, black, white. The fire kept going out. Got the iPad a little scorched there. Actually, it's not an iPad. All right, let's begin tonight. Feel free with any questions as always as we go through this. I suspect, feel free with any questions. I do want to kind of hit this slide a second. I don't normally do it, but just to give a little setting for tonight. Last year, I believe I did a highlight film of 2024. This will not be that, but I am going to have a frank discussion about what trading is, a summary of the key things that most could do to improve, how to start, and the biggest misconceptions. I'm in a unique position of talking to newbies and to people who are struggling that are not part of DDS, as well as working with my seminar program members. I also come from the unique perspective that I did not know a stock from a bond when I started, a background that I feel is best to train new traders. Becoming a trader almost sounds like a stereotype that sounds daunting. It can just be that you want to manage your long-term portfolio properly or want to make a little extra money a couple of mornings a week. I'm torn on this presentation when I got all done with it because I'm kind of glad I hit a time limit and just had to stop, because it's one of those things where you're trying to summarize how you feel about something and the best of the best. It's impossible to do, really. And I went through, I just kind of got some ideas looking at old events. I'm like, there's so many great events out there. For those of you that haven't done the whole free stuff page, or those of you that have platinum of all the old stuff, there's so many really good. Now it's just me talking about my own events, so maybe you don't agree, but there's just so many good things out there to do. And to try and summarize everything, if you emphasize everything, you've emphasized nothing. So it's kind of hard for me to pick out, but I want to hit the stuff that maybe I haven't said crystal clear. Naturally, after all these presentations, and for those in the seminar program and all the podcasts I've done, it's hard to not have heard something before, but maybe said in a different way, in a different tone. Maybe it means something to you. So let's start off with being a trader, first of all. The reason I get onto some topics is because the feedback that I get, not directly, it's not somebody says, hey, I don't like the sound of this being a trader, what does that mean? But more or less just because people seem to think like this is, gee, I don't know if I can begin to look at something like that. And it's just not really the right impression to have. I think I've been ignorant of one of the issues new traders may have. If I was training people how to cook better for themselves or for their families, something that I could not do, by the way, is Mirnas here? Mirnas could do that. Mirnas is an expert chef. He's not here. But if I was going to just train people how to cook a little better, and I said I was teaching how to become a professional chef, it may scare some people off, right? Hey, I just want to learn how to cook a little better. I've got the sense that the same thing is true with what we're doing here. I have been ignorant because so many of you picture being a trader as some immense operation, something that has to supersede all else in your life, or something that just sounds so dauntingly difficult because of what you heard about it, that it's just something that scares you, so to speak, and that is just not the case at all. Nothing should be further from the truth. No one should start off full-time and have this as your main source of income. Nobody can do that. Nobody should do that. I've talked to people and I have, discouraged them. I even turned a couple people down from the seminar program because they had the impression that they're going to quit their job and start trading tomorrow, make all kinds of money. And it doesn't work that way. So that shouldn't be one of your fears. Everyone should start off kind of full-time, everyone should start off kind of part-time. I said full-time. Everyone should start off kind of part-time and build into it. And if you want to kind of go full-time, if you have, the bankroll where you can take off work for a period of time, you don't need any income, that's fine too. I just don't want people thinking that, oh, I'm going to go do this and I'm going to start making my income next week to pay all my bills. It doesn't really work that way. So everyone should have the attitude, if you're going to start off, of starting off on just kind of a part-time thing, and just it's very simple. It's just see where it goes. People ask me sometimes, hey, I'm doing really well, you know, can I cut back on my job or cut back my hours or quit my job? And I'm like, hey, that's not something you ask me. When you're making income and trading consistently that supersedes your job and you feel your job is cutting into your time or costing you money, well, then it's your decision. But you don't do it until then. You don't just assume that you're going to develop into the greatest trader in the world before you do that. So everyone should start off part-time. It should be a very stressless type of thing. Trading should be fun. Somebody asked that the other day. It should be fun, not stressful at all. So even if it is your goal to become full-time as a trader, both day trader and long-term, you still start off and ease your way into that, so to speak. Clear so far? I don't want to sit here and talk nonstop like I did last night. This is 3 nights in a row, by the way. This is a DTS record. You have any comments or questions as we go? I'm just going to stop and ask every once in a while because I think last night I talked for 20 minutes straight and that said, hey, anybody got anything to say? I'll go to the next slide though while someone is typing. Any major task starts off with a small step. Start off part-time, paper trade, whatever you're looking to do, see how you like it. You may quickly find you can manage your own long-term positions. That'd be a great step. Or make some income day trading. Then you see where it takes you. There are a lot of people in the room that are full-time, and I'm sure when they started off, I don't think that they, and a lot of these people have been, doing this for years and years, like me. I don't think most of them just said, well, I'm quitting my job today, I'm going to start day trading tomorrow, here we go. It could be just that you take over your long-term positions. And as I said, and I've mentioned this in other events, and particularly for sure in the intro class, that a great way to ease into it is, let's say you are learning or you take a seminar program or whatever you do and you decide you want to take over your long-term portfolio, and the other members of your family are financially involved with you, or the people that are financially involved with you say, oh no, you're not touching that. There's a great compromise. Say, hey, we have X dollars over there. I'm going to take 20% of it, put it in my account, and if I can't beat, that guy over there over the next 3 months, I'll give it back. If I beat him, I want another 20%. So that's how you start off, just kind of proving yourself. No stress, no hassle. The whole world is not looking at you to see how you can do. And the same thing day trading. You start off, you're going to start day trading, just paper, make a few bucks, add to it, and just see where it takes you. First to tell you, it's not necessarily for everybody. There are people that fail at it. Most people, the people that fail generally don't try to get any education. They almost 100% fail because trading is not very intuitive, something my last slide will talk about. But even people with education, I know some of them failed. I don't really hear about them, to be honest with you. And it's a good or a bad thing, but I think I always have the respect of people that if somebody can't make it, and I'm sure some can't, I never hear from them. I don't hear, oh, Paul, I failed. And I'm also not sure what failure is necessarily. I mean, if let's say you sign up for the seminar program and you do some day trading, and let's say you make 50,000 the first year or something, but it's not enough to support you or whatever. So you have to take up a job. I mean, did you fail or were you partly successful? I don't know what some of the definitions are. Somebody who did nothing but lose money would be a failure, but I don't hear that story very much. So I think if you put your mind to it and learn, it's all very doable. A lot of people do it. It should not be something that's scary. So anyways, if you're looking just to be long-term, equipment-wise, all you need to have is a laptop. If you're going to be day trading, you have to have a little better equipment. You need a more up-to-date computer, a couple, 3, 4 monitors, whatever you want, and a good internet speed. But the point of all this is I just get such a sense, and it's a small first topic to talk about tonight, but I just get such a sense that so many people feel this is just such a daunting, difficult thing to do, and partly maybe because of something I talked about last night, it's just that aura about being a day trader, like it's just such a negative thing, like There, and there have been in the past, there have been tons of people that lose money as day traders because they don't know what they're doing. And it just gives that aura out there. And there's people in chat rooms saying, oh, you can't make money in the market. It's impossible. And education is for idiots. There's nothing to learn. You just follow a trend, but it doesn't work. So there's just a lot of negativity out there. And there certainly doesn't need to be. I mean, I think most of you have been around here know, see, understand, what you can do. It's just a matter of if you want to decide to learn or follow along or whatever it is. Enough of this topic. Even I'm getting bored of this topic. Definition of trading. I've hit on this definition on several events. I've muttered the words, but I've never really talked about it a whole lot. So I wanted to give you my definition of trading. This is from me. You'll never find this on the internet anywhere because I made it up. You may like it, you may not like it, but I think it is, in essence, of what trading is all about. Monitoring the battle, see who wins, see who loses the battle, between the bulls and the bears across the 4 time frames that matter for your particular trade. Those 4 time frames, of course, would vary with what you're trading, whether you're day trading, scalping, swing trading, long-term trading, whatever it is. That is the definition. How do you like that definition, everybody? Well, that's a good point. I mean, this is my stupid definition. Naturally, to trade, after monitoring, you have to make decisions. But I mean, that's the decision-making process comes from monitoring the battle. Yeah. I mean, obviously, if you're going to trade, you have to take the next step beyond monitoring the battle. But I think that's a fair statement, what I said. I mean, if I'm going to ask you very well, how do you pass the bar exam? And I said, by studying, and then you went, oh, just studying? You never go actually take the bar exam? I mean, of course, you have to follow up on that. But that's the key essence of what you do, right? It's important also what's not in there. 4 time frames. Just so happens that these 4 time frames are the market today. This is the QQQ today. 2-minute chart, hourly chart. Oh, they're all messed up. I can't quite read them. So obviously it's an hourly chart. That's the daily chart. Oh, that was this afternoon. That was before that red bar. 5-minute chart, 2-minute chart. So that was the market today. And today was just kind of a neat example because the time frames that I am monitoring really had only one story to tell today. Now, it's easy after the day's over. You hear people all the time on the news and all the experts telling you why the market did what it did because after the market is closed, everybody's an expert on why it did it. But the advantage I get is that I am in a trading room and I also write a letter. And yeah, this is today's market. Can you see these better? Yeah, 2-minute, hourly, daily, yeah, they're kind of in the weird order, but that doesn't really matter. There's only one picture for today what the market was, and that was bearish. That's all the picture was. The time frames don't always come together. A lot of times there's some indecision. A lot of times it's not clear. A lot of times your comment when you monitor those 4 time frames or do you like analyze better? VRL, is that a better word? Analyze the battle. Sometimes you analyze the battle, there's not a clear victor. I like the analogies of trading. I like to take the analogy to football or to old Civil War type days with armies. And, a lot of times you're watching a football game and it's 2 very close teams and, halfway through the game you may say, gee, I don't know who's going to win. The stats are this, the stats are that, and you can look at all these stats. But on some games, the score may be 7-7 after the first quarter, but you look at the stats underneath that 7-7, and you're like, wow, Team A is killing Team B. Team B is lucky they're in this game, And that's kind of what it is in monitoring charts, but it's not always crystal clear. Today was crystal clear. And it's not because it's after the fact. This is the daily market letter, and some of you get this, so if I'm lying to you, please tell me. There's only one call for today, and it was short. I mean, one bullish or bearish. There's only one thing today. It was if we open here, blah, 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 short. If we ever trade above this, you short below that. If we trade above this, you short below that. If we're just short. That's all it was, because there's a very clear interaction of the 4 time frames. When I did this, or when I was trading this, did I care what the econ number was that came out at 8:30 or at 10 o'clock? Did I care did I go look it up and go, oh, wait a minute, the GTP, they said it's 0.1% under what it's supposed to be. Did I look up any of those numbers? Especially like when you see this 2-minute chart right here. Boy, that's a beautiful little area. I mean, when we were right here, 10:15 or something, did I care what any numbers were in the world? Nothing, right? Not a thing. Why would I? Matter of fact, what if what came out this morning was good news in the market? What if good news came out right at open or before open, and this is what the market did? Should I be looking long, everybody? Should I be looking long because the market had good news? No. As a matter of fact, that's all the more reason to be extra bearish. Because if good news makes the market drop, I mean, what is bad news going to do? In other words, nobody cares about the news in reality. I've explained this many times that the market does what it's going to do based on supply and demand. And there's little knee-jerk reactions. The only exception to that is truly shock value type of news. None of this garbage you hear every day is shock value. Stocks get shock value news routinely because they get their earnings reports that come out. And a lot of times the stock has been expecting really good earnings and it comes out with a terrible report. That's shock value. But all the economic numbers you hear, all this garbage, none of it is shock value. I've done this in other events. I've done it in some of the podcasts, talked about it. The fact that after the market closes, people go back and they pick on whatever news they need to justify what the market did, and it makes you think that the news matters. If you use your common sense, and I have a slide about common sense coming up, if you think about it, using common sense, do you really think in the grand scheme of the market, in a bull run that's been going on for 14 years, do you think that the GDP comes in 0.1% year over year below what, do you really think that's going to affect people? You really think that matters? Do you think the market hasn't built in some expectation? The market is the greatest forward-looking indicator of everything out there. And how far forward it looks and to what extent, we don't know. That's the mystery about the market. But it's incorporated all this stuff, right? Anybody out there, what were tariffs going to do to the market? What were tariffs going to do to the market? 100% of all pundits, I mean, it's never 100%, there's always the naysayers, but every major person out there said that tariffs are going to do what to the stock market? Everywhere you turn. Absolutely kill it. No question about it, right? Especially car dealers. You seen GM or Ford lately? Yeah. So I don't really know what tariffs would do to the market. I'm not that smart. And the people who are on TV talking to you aren't that smart either. They're just there trying to make a name for themselves. So blah, 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 blah. Here's what matters. The dust settles, we're moving higher. Okay, we're moving higher till we're not. You follow charts, you follow price action. It's not hard to learn or understand, but to do it, you have to clear your head of all that other garbage out there that most people unfortunately spend all their time listening to and looking at. You notice my definition of trading had nothing to do with looking up fundamentals, reading earnings report, and I apologize to some of you who understand this and who already know it, but I still run into this an awful lot. It has nothing to do with keeping up on economic news. It has nothing to do with listening to pundits. Nothing to do with getting hot stock recommendations. It's just unbelievable to me, you know, how many times I'll hear, even on the Monday night scanning session sometimes, or sometimes by email, it's like, oh, Paul, some guy recommended the stock. And the stock's, you know, it's been up for 12 weeks. Some guy recommended the stock. Okay, well, who cares? I don't care. I don't care about what anybody, I don't mean this to sound the wrong way, but I don't really care what anybody says about anything in the market. I mean, I have charts, and that's all I need. I don't care about anything else. Common sense, is that really next? Oh, that's interesting. Okay. That's fine. I actually thought this was like almost the last slide in here, but no, we have a lot to go. Common sense in trading. And a hard time thinking about this because I've talked about it in two directions, and here's why. It's because when you're learning how to trade, use your common sense. In other words, when you get the email that said, you know, oh, we just made 500% on this options trade, use your common sense. Is that the routine? Does this person, does this firm, does this letter actually even make money? Or is this that one sample? You know, there was the stuff that goes on, a lot of you are probably aware of, and many of you are probably not. One of my favorites was before the internet. You know what the great scam was? That you would get when you get letters in the mail, you would get from the bullish advisor, you would get this letter that would say 100% the market is going higher over the next 3 years. Put all your money in the market. There's no doubt about it, right? And then you'd get the bear advisor, and it would be the market is about to tank. Take all your money out of the market, short the market. And this is this free letter you get in the mail for no reason. And then there'd be the realistic advisor or something saying the market's going to be choppy for the next couple of years. Don't do anything. You know what the bottom line was, so those three letters, the bear advisor, the bull advisor, and the neutral advisor. Do you know what the funny thing was about all three of those letters? Anyone? They were all written by the same person, by the same company, just three different subnames. No, they were, seriously. Happened all the time, Bureau. They didn't put the same name, but I mean, a company and they had, doing business as names or whatever, and it came out as three different letters. And of course, what happens is over the next year, one of those three will probably happen, right? And then they'd follow up and say, look, here's the letter we sent you. We told you the market would be up like crazy. Now subscribe to us and follow us so we know what we're doing. That's how scammy it is out there. It's the same type of thing you see these days. You get these options things. I know this firsthand from somebody. You get these options things. Oh, I made 500%, whatever. What the person does is they'll take out just a minimal position. They'll take 10 different positions with minimal, just one contract. And 9 of them all go zero, but then the 1 in 10, 1 in 20, it goes up like crazy. And they advertise the one. They probably lost money just getting that one thing together to put it in a newsletter. I'm not saying everyone's a scam. I'm just saying this is what you see out there. So use your common sense. Even yesterday, somebody's asking me about, option signals in a letter, and these option signals make money. No, they don't. I mean, I don't even have to look anymore. I don't even need you to send it to me. They just don't, because that's where you have to use your common sense. Do you really think that in this game where billions of dollars trades hands every day, that you're going to be able to, make money from some little piece of software or some, these little things? No, but you can by just understanding charts and seeing the day-to-day reaction of stuff. We'll get more to that in just a second there. Use common sense. Do you think that you can read the internet somehow and walk away with a different answer than the other 100 million people that just read the same info? That's another one that just amazes me. People that read the internet and tell me what's going on in the world. Well, okay, you just read that article. So did 100 million other people just read that article. And here's what the stock has been doing. And that article was out yesterday. So what are we talking about, right? Does that make sense what I'm saying, everybody? I mean, does that really sink in how stupid it is? I can't use a different word because I have to be direct. Now, again, I have nothing against wanting to understand things as a human being, as a person. You want to know something about the company, you want to know, that's fine. But that has nothing to do with your trading or investing. I don't care if you're day trading. I don't care if you're long term. None of that stuff matters. It can't, because this is the price that however many million people through an auction process have decided it is worth, and that's incorporated everything you've read, and also it's incorporated a look into the future that you don't even have. Actual trading, though, common sense in trading, use your common sense when you're looking at stuff and deciding how to learn how to trade. Obviously, if any of those things worked, the software, the technical indicator, all that stuff, everyone would use it. And then if everyone used it, it wouldn't work. And that's the same thing with, I told you this, it was probably a year ago when AI was coming out, and people, oh, Paul, it's going to it's going to change the trading world. AI is coming out. I'm like, no, it's not. It's the same thing as computer programming, program trading, and software trading. I've been through this for years, because once it comes out, guess what? It's kind of like everyone's using it now. It's back to nothing again. It's just nothing, right? Don't believe me? Go look it up. Go use AI software. Go use an AI broker. Zip. There's nothing out there. Zero. Nothing. Go find out for yourself. The one thing that'll never change is whatever happens is the market is always the market. Charts are charts. Charts are the only truth. And they print that battle between the bulls and the bears. And I'm preaching a lot here to just people who have not yet decided to get involved with trading some way or another. Now, are you being serious or are you tongue in cheek? Because I answered this question a couple weeks ago. I mean, first of all, you mean if the whole, okay, a little joke, all right, okay. Because I've had people ask similar things. I mean, obviously DTS is extremely small and minute. But I will raise the crux of your question, is that even if, let's say DTS grew to train thousands and thousands of people. The point is, DTS, as you know, VRL, is that you are trained to read a chart. And then you go out and you find different charts to read, and you may love 15-minute pullbacks intraday. You may love swing trading. You may like 1 minute breakup, So everybody's going to be scattered around, and they may be all using DTS principles or concepts or whatever it is you learn to trade by. But nobody's going to be sitting on the same stock at the same moment in the same place unless you're in the trading room. I know you're kind of joking, but I answer that because a lot of people kind of ask that. But it is that concept, though, when you're talking about software, that if there was some magical thing that was just so easy, you plug it in and it worked, it wouldn't work by definition because there have to be losers in the market. Enough on this topic. Actual trading, do the opposite of what your common sense tells you. Does this make sense to you, everybody? For actual trading, do the opposite of what your common sense tells you? Do some of you understand, believe that, get it? Because I have the ultimate proof of that. Yeah. The ultimate proof is simply that, I don't know where they get the number from, but 95% of the people that come into the market untrained lose money. I always joked around, if you want a surefire way to make money, you want the shortcut to making money via rail, you know what you do? Is that you wait for some friend to ask you how to learn how to trade, and then you tell them, oh, just go read some stuff on the internet. And then you hook up a camera in their office. And then once they start trading, you watch them. And if they're day trading, you wait about, well, if they're day trading a 15-minute chart, wait about 3 minutes after they take their trade and do the opposite. Do the opposite. That would really be a great trading system. It really would be. Because everybody's common sense is wired totally backwards for what the market is. How many times do people get out, even yourself included in the past, how many times do people get out of trades extremely close to when they should actually be getting into it? Long term, short term, it simply doesn't matter. Nothing makes sense as you would normally think about it, right? I mean, how can a stock report the best earnings they have in 2 years and it fall for 3 months? And that's not a fluke, that's a routine thing. How can that possibly happen? It defies people's common sense because they have no concept of how the market works, how charts work, what supply and demand is all about. Obviously, this is going to make it if you listen to me because this has been kind of my preach of the year, so to speak. So I wanted to touch on this as the fireside chat concept. Learn a strategy. No. Let's go back to the chef analogy. And right when this hit me about a chef, this is a pretty good analogy. At first I thought, oh, maybe not that. I go, yeah, actually it is. Learn this one recipe, the new recipe for 2026, and you will be a master chef. Isn't that a very good analogy, actually? Training to be a master chef is to a recipe as training to be a master trader is to a strategy, right? Isn't that a great thing? Because as a chef, yes, you can create your recipes, right? But just because you read a recipe, it doesn't make you a chef. And it's the exact same thing I'm trying to get across about trading, is that you can look at a strategy and okay, there's a strategy, but to implement it, to understand it, to change it, to modify it, to tweak it, to have the market change and you change your strategy along with it, well, how does that happen? And how do you get the precision from just reading some kind of strategy? Chefs use recipes. Yes, they do. But the recipes are the result of a knowledge of how to cook. Otherwise, now here's where if you're not sold the analogy, you're going to love it. Couldn't we all be master chefs by reading a cookbook? True? Everyone would be a master. You want to be a master chef? You don't need any skill training whatsoever. You can just go take over. What's the name of the fanciest restaurant in Beverly Hills? Oh, where did the governor eat? The Frog. The Frog. Where did he eat that day? It's like one of the nice restaurants in the country, right? What's that called? The French Laundry. You could be a chef at the French Laundry, right? Next week, just go read a book of recipes. Memorize the recipes. Boom, there you go, right? It's the same exact thing. It's just like somebody saying to you, oh, all you just learn these strategies and you'll be a master trader. No, that's not really what it is. Strategies are just the output of understanding charts well enough to know to be able to say, hey, if this, and this happens, bam, then that's going to happen, right? And I'm going to follow this up with even a more cool example here. You ready for this? Traders learn how to read a chart. That can sometimes lead to something called a strategy that may be quantified and used for a while. You might even give it a name, which I do when I teach. We have quote unquote strategies, right? But I also emphasize that the precision of that strategy is going to change with your expertise. In other words, somebody asked me in class, or was it in class Saturday? He's probably here. It doesn't matter who it was. But they kind of said, okay, Paul, what's your favorite setup? I think about it for a minute. And I answered the question, and then all the really good stuff came to me afterwards. So if you're here, let me um, let me add to that. So I said, here's my favorite strategy. It's a mini gap under a mattress with a beads tail entry coming back into the bottom of the base. Okay, now I'm not, trying to flabbergast you that don't have the seminar program. It's not the point. The point is that's a description. Now, I don't actually have a name for that. That's point number one, right? Is that I don't actually have a name for that. Just a description of what my favorite thing is. But even understanding exactly what I said doesn't make you a great trader. Taking the seminar program and understanding every aspect of what I said is what makes you a great trader. Shorting the rally back into the base. Do you know what that means? If you've been through all the home study VRL, I hate to pick on you. Roger probably is. In the home study, right, there is a breakout session that was from a PRD called Thought Process of Be the Tail, right? True or false? That is a 1 hour discussion about what it means to short the rally back into the base, right? So there's an hour discussion about the whole thought process of how you do it, where you, thank you, Neil, where you change from, shorting this with your stop here to let's short here with the stop here, and let's finally short here with the stop here, and where and how it changed in the thought process. But it's not like I can say, oh, gee, when you're 13% of the way to the base, that's not how it works in trading because percentages don't work because all volatilities are different. That's where the art comes in a little bit. So you get structure to the nth degree, but then there's this little thing. It's the same thing as being a chef, right? You can have a recipe in front of you, right? But I got a hunch if I had a recipe and Ramsey, there's a name I know, and Ramsey had a recipe and we went to cook next to each other, right? My food would be inedible and his food would be a masterpiece, even though we're reading the same recipe, right? Because it just doesn't come out the same. It's the same thing. I can tell you my favorite setup, but if you go and trade it the next 3 times, I may look at you and you go, what the hell are you doing? That's not even what I described, right? Cool. Thanks, Roger. All right. This is the heart of tonight. I think this whole strategy setup thing, because it is something you see so much. And it drives me nuts, the emails that I see, like, oh, learn the new strategies for next year. That is just pure scam talking, right? There's nothing you can learn in 13 minutes or in one video that's going to be the master. It may be a general concept that's true. I don't deny some of it's true, but you just can't make money from it because you have to understand how to read a chart. So this is an example of, yeah, here's my favorite setup, so to speak, strategy, but without the meat around it, it's almost worthless. And conversely, as I said before, sometimes I go to put in the room for the tracking sheet for the trading room, I put just a quick blurb about what the strategy setup was or the strategy and entry was. And sometimes I don't really have a name for it. I mean, it's a legitimate trade. It's a good trade. Maybe made money on the trade, but I don't have like a cookie cutter name for it that goes, oh, it's the double Heimlich crossover pattern. It just, hey, this is what happened on 4 different time frames, and there's no way I'm not taking that long. And that's what trading's all about to me. Yeah, and that's absolutely, that's part of it, Roger. Absolutely, experience takes over because you goof it up a couple times and then you learn it right when you get the experience. Does that mean, does all this mean, Paul, that what you said, if we're not looking at news and we're not, does that mean that trading is just like a video game? Yeah, that's exactly what I mean. Sorry, it is. If you want to be smart and learn about companies, great. I mean, do that. That's a wonderful thing. Go learn about all the companies you want to learn about. But when you're trading, I mean, the best thing you can do is just look at those charts, forget everything else. I tend to, even though listening to news wouldn't affect me at all because I think I know what a joke it is, I tend to listen to music in the morning and just have a clear mind and not even get influenced by or get upset by the yakety yaks on TV that are not helping me decide what to do. You may not be able to short a stock that just released the best earnings report of its life, but that might be the right thing to do. You may not be able to go long the market when every pundit on TV just said, oh, we're increasing tariffs and tariffs are going to kill the economy and the stock market. Did you hear the news? What an example. Yesterday, here's just the greatest example, and this was literally yesterday. I was doing this trade. This is Riley. Entered right there. I would like to tell you I sold it here, but I got a little. idiot problem yesterday, and I sold it. Made over the day's goal on it. It was a nice trade, but I saw I got taken out right here. See that? And then I went to there. I shouldn't have done that really because it was a really nice trade. But did you know something about Riley yesterday? I got an email in the middle of Riley. People didn't want to post it in the room. You know what the email was? Did you see this? Would you throw it on the ground? And I really don't know. This is yesterday. Riley Investors. Ross and law firm announces investigation of breaches of fiduciary duty by the directors of officers of Riley. Paul, you're long this stock and they're being sued. What are you doing? I'm serious. I really don't know. I mean, that was dated yesterday. I didn't look at it. I don't care. I'm just like, well, whatever. Here's the chart. Whatever that means, they're being sued. Maybe they're being sued because they just announced them to make so much money. Somebody wants to get some of that money from them. I don't know, right? But this is why you don't listen to stuff now, right? That's why you don't listen. It's like, who cares? Who cares? What is the point? And whenever somebody says that, like says something like that in a room, I try and be nice to people in the room, but it's always like, all right, so what am I going to do different now? Here I am in this trade, and now you're telling me that at 8:30 this morning they announced a lawsuit against them. What, should I just get out because the whole world didn't read this until now, or what? Roger, that is way more than I know. It is way more than I know. I had a long-term position once, and I couldn't think of the name of the company. Honest to God, I'm not kidding. It was just I knew the symbol. I couldn't remember that. I knew it at one point, but it just slipped away from me. So there's the news. And that doesn't make the point. And I want to do this Intel thing one time. Some of you have not heard this. I've done this occasionally in the past for the group, but just to kind of make the point. Here's the story. And unfortunately, I did do this at the most recent intro class, but not a whole lot of people were there. Here's a story that I think almost everybody answers the question wrong. And to me, I don't get how you could answer this wrong because it's common sense in the good way. So here's the story. You're day trading. My first teacher from 1982 was using the astronomy and gastronomy. Oh, JJ, were you from Chicago? Is that a Chicago event? Because I am not kidding you. When I started trading, I was in Chicago area in 1999. There was a station. It was on UHF. Remember the TVs was on UHF, and they were using astrology to predict the market. It was on TV for years. That's why I'm wondering if, and they were just a Chicago local thing. I know because it came on a local station. But anyways, yeah, it's amazing. Well, it's like you bring up a good point, and that's yeah, right, okay. But the great point you bring up is what I always mention about like fundamentals. People say, oh, and somebody just asked me a couple weeks ago, say, Paul, this guy uses fundamentals, he swears it works and blah, blah, blah. Well, if you are using fundamentals in order to justify being long, like if you're going to be nothing but long, right, and you pick your stocks on fundamentals, in a bull market, guess what? Everything's going up. And like I always say, you could pick your companies because of fundamentals. You could pick it because of the astrological signs. You could pick it because of the color of the company logo. You're going to make money if you're always going long in a bull market. That's great. Wonderful. But then why learn anything? Just put your money into the QQQ and forget about it until you decide you don't want it anymore. But when things get choppy, when things start dropping, see how that approach works for you, including the astrological signs. I believe it did come off the TV before I ever left Chicago. But so here you are, you're day trading. Here's you. I'm just going to make you as an X. You, me, whatever. Where's an X? Here we're day trading. And you decide to go long Intel. Just doesn't matter why. You go long Intel. You take a fairly good position. And right after you go long Intel, you decide you're in your home office, you're in your home, and you decide you have to go use the restroom. So you take off and you decide, I'm not going to set a stop on Intel. I'm going to be gone 5 minutes, right? I'll be right back. So you're gone for 5 minutes, and you come walking back. And as you come walking back, you pass a TV in your house. And in the TV in your house, on there, this lady is screaming. Picture Maria Bartiromo screaming at the top of her lungs. Intel, OMG, Intel. I can't believe this about Intel. This is once in a lifetime Intel. I can't believe this. Oh, geez, what are we going to do, Intel? So your heart drops to your stomach because you're long Intel. I'm going to put an arrow, you're long Intel. And you're sweating because you don't have a stop on it. You're like, oh my gosh, I wonder what's going on. So you come running back to the screen And you can tell by what she's saying that this happened about 2, 3 minutes ago. So by the time you get back to the screen, the news has been out for 3 minutes. You look at Intel, and it's down 2 cents. It's down 2 cents. That's all that's happened. So now you turn back to the TV, and what do you want to hear? You want to hear good news about Intel or bad? Real question. You're long Intel. 3 minutes after the news came out, it's down 2 cents. It's the most incredible news in history. Do you want the news to be good or bad on Intel? I probably prefer that I didn't have a position on Intel. Yeah, exactly. You guys all got it right this thing. Yeah, maybe you've heard this enough too. But yes, I would actually prefer it was bad news. Because if the best news in the world made Intel drop 2 cents, something's really wrong, either about your news story, about how it's interpreted, and conversely, if the worst news in the world about Intel only made it drop 2 cents, that's probably kind of bullish, right? It's a reverse thing, and this is where it's so crazy when good news comes out and the stock's dropping, and people, oh, got to get long, what an opportunity to get long. No, it's not an opportunity to get long. It's a trap for pure idiots, right? So, and obviously just a very general statement. We don't have any charts or know what's going on with anything else. Any questions? Exactly, JJ. Price, at the moment, price is the only truth that happens. It's the only truth that prints in the market. The company CEOs lie and the news lies and people just make things up, but price is what matters. Price is what's actually happening. Price is where big money is putting money down. And remember, price fluctuates. That's why we have to look at trends, and you have to look at trends across the 4 pertinent time frames that matter. Remember, even the most bullish stock has what you would call pullbacks, and that causes downtrends on certain time frames. You have to put it all together. Other questions from anybody? Last night's event was all about day trading, but it was really, really good. Totally with you on fundamentals versus technicals, but don't fundamentalists buy their current price too because they think price would be higher later on? So aren't they in a similar way, not necessarily disagreeing with the current price, but rather opening for price rising? Yes, but they are specifically basing their hope for price rising VRL. Haven't you seen the intro class? I mean, you've seen the intro class, right? How I do that? I do that little mock thing where I'm doing a fundamental trade and go through everything. Yeah, so I mean, they're basing their view, a pure fundamentalist, on the fact that they looked at all the fundamentals and decided that even though the stock's trading at $42, they feel it's worth $46 based on voodoo numbers that mean absolutely nothing. So that's what's crazy. But again, if you're in a bull market and going long, I don't care what you look at. I mean, even if you're technical, if you just buy anything anywhere and say it's based on the crossover of the 6 and the 300 period moving average, you're probably going to make money if you stick with it and don't get out of it. So, but no, I mean, they're not looking at a pure trend at all. And the test will be VRL when things get really choppy or when things start dropping. See how well fundamental trading works compared to technical trading, which will be all over it. The chances of me losing money in a bear market are 0. It's possible I may lose a little bit right before the bear market starts. That's my flaw sometimes. But what else we got? Because when I put up that last slide, I got to say goodbye. So technical analysts are not sort of disagreeing with the current price too, correct? They follow TA. No, not really. But no, I get your question. I mean, the technical view would be to say that the current price is correct, but the trend indicates that it will continue to increase in the future. Obviously, whatever the stock is trading at is the correct fair value price for what it's at currently. But what the technical person is saying, VRL, it's not that fundamentals are wrong. It's not that economic reports are wrong. It's not that earnings statements are wrong, even though they usually are. It's just saying that that the price has encompassed all of those things. And if we are in a situation where things are improving or whatever it is, and the trend is that we continue higher, that trend will continue. Trends exist in virtually every business and every aspect of life, whatever it is. If there's a trend for usage, I mean, you're a bookseller, and you see that every Christmas book sales have gone up 10%, right? Does that mean that this year's book estimate was wrong? because next year we're going up 10%? No, it means that it's correct. This is a good analogy again, by the way. I'm hot on these analogies today, right? So it means that for whatever reason, because of population growth, because of people's interest in books, or whatever it is, then more and more people are reading books. So we ordered 3.2 million for this year. That was perfect. But next year we have to order 3.52 million because that's the 10% increase, and that ought to be just right, right? So it's correct for where we are now, but we project. And the thing is about technical analysis too is that it could change. I mean, things happen that could change your view. You get a view of, here we go, we're approaching some number. We expect bulls to be doing a certain thing. We expect bears to be doing this thing. All of a sudden, the bulls just quit on us. The bears attack. The bulls don't fight back very much. They say, hey, wait a minute. This trend is changing. Just like if your books that year you ordered 3.52 million and you only sold 3.1 million, you say, well, wait a minute. Trend is changing. Next year, we're going to readjust what it is. And for that 1 year, you may be caught with your hands up a little bit, but then you adjust quickly. You don't keep saying, these are good books, I'm going to order 4 million. These are good books, I'm going to order 5 million, even though people are buying 2 million, right? I just gave a great story there. Wasn't that great about the books? Because that's what a fundamental person would do, VRL, right? They'd say, this is a great book. I'm doubling the order for next year. It's a great book. That's all there is to it. I don't care who's buying it. It's a great book. VRL was so impressed with that answer, he passed out at his computer. I just woke up again, right? But that's really a good analogy for what it is. I guess in parting, you go back to that slide. I'll go back to it. Where is this what trading is? And on one hand, you hate to bring it down to that because people almost get insulted sometimes to say, well, I'm just watching a screen and playing a video game, but it is really what you're doing. When you see what really makes up the heart of trading and what I do and what I look at and how it works, we're just finding these moments in time. We're finding these spots where you say, hey, you know what? Look what's happening here. If the bulls can't support this level, this is a short. And that's what we're doing. We're finding those little levels, those little moments in time, whether it's on a 5-minute chart intraday or whether it's on a weekly chart or a daily chart long term. That's what we're trying to do. And it is, in essence, like you're playing a video game, and we don't care about anything else. I think we're out of questions. Thanks, everybody. And for those of you that are free members, this is the last you're going to hear from me. So Merry Christmas, Happy New Year, Happy Hanukkah, or just Happy Holidays. Enjoy your time off, whatever it is you celebrate or like. And for the trading room members, I'll see you tomorrow for a couple more days. And summer people, I'll get to see you on Saturday too. And then we'll all be on vacation for a little bit and see you back at the beginning of the year, all right, in 2026. Take care, everyone.